Alright, bet. Today is the 6th of June, being a Saturday, and this video is simply just going to be doing a trade analysis on the trade I took on NASDAQ on the 5th of June, being a Friday. So, in relation to the economic calendar, Friday's trading, we had high impact news at 8:30, being NFP, and yeah, I'm going to take a look at the trade took during the New York AM session. So, New York AM session. Hour 1, power of 3 was what we were framing. 15-second standard deviation projecting for sell side, and then that -2, -2.5 was utilized in order to locate that continuation for the inception model, since this trade was inception continuation. And then we were also framing an M5 power of 3. We utilized an M1 propulsion block to then utilize a 5-second change in stay in delivery to execute off of. And we had an M1 standard deviation projecting for sell side, and then a -4, -4.5 of an original standard deviation was utilized to exit the trade. And then the new week opening gap was the drawn liquidity ultimately. So simply just going to jump straight in, taking a look at the trade. So starting at the hour 1. So when it comes to the inception continuations, a story essentially has to be painted in terms of what led to the conviction in order for us to say price action is going to continue in the direction that we are currently seeing price action deliver in. So when we're taking a look at this hourly chart right here, taking notice to is the fact that, okay, 1800 we open, we deliver down towards sell side, and then we have the formation of this hour 1 order block right here. So the series of up close candles, a series of down close candles. And once price action breaches this low, we end up slipping into a phase of consolidation. So we're simply just meandering around just under the hour 1 order block, and we end up forming the Asia high just coming in right here. So Asia high forms right here, and we continue this meandering around just under the hour 1 order block, and then London opens and we have that deliverance up towards the buy side, engaging with the Asia high. And with the engagement with the Asia high, once again, we're simply just engaging with that hour 1 order block, and then we have a series of down close candles closing below these series of up close candles, forming our change in stay in delivery after engaging with the Asia high. This candle right here would be where our NFP candle dropped at 8:30, and then we have 9:30 being this candle. So we end up seeing 9:30 inviting that sell side deliverance towards this new week opening gap. But with this leg right here, we can anchor a standard deviation anchored to this candle's high all the way down to this candle's low. So we end up seeing that deliverance down towards sell side off of that 8:30, 9:30 opening. We have 10 a.m. opening right here, and 10 a.m. retraces back into the range. And then we have 11 a.m. opening up right here. Dropping down, taking a look at the 5-minute time frame, a lot more descriptive of what we have going on. So we have that hour 1 order block engaged with, deliverance down towards sell side, rather heavy. We have that 9:30 opening, inviting for that heavy sell side deliverance. So 9:30 opens, whipsaw candle, we end up engaging with this imbalance right here, and then we continue that sell side delivery motion. We have 10 a.m. opening on this candle right here. 10 a.m. opens, and then we have that deliverance up towards buy side. Now, with the retracement back into the range after the 10 a.m. opening, we only retrace back into a premium of the opening range. So that 9:30 all the way up until 10, that would be the opening range for the AM session. We retrace back into a premium, and the Kraken correlation also establishes itself here. So NASDAQ delivers into a premium of that opening range, but a correlated asset fails to follow suit, and you can deem this an equilibrium Kraken correlation. So after the deliverance into a premium of that range, we end up seeing price action just slipping into a phase of consolidation. We're simply just meandering around for that first hour of the 10 a.m. candle. We end up printing an M5 imbalance being right here. We end up delivering into this M5 SIBI low during this candle's trading, and then we have the 11 a.m. candle opening right after. And we have that sell side deliverance towards our opening range low. Now the M5 candle in which we framed a power of 3 off of would have been this 11:10 candle right here. So it would have been an open, high, low, and then close that we were looking to frame off of. And what we can take a notice to is that this candle opens here, and very low hanging fruit being that opening range low resides right here, as well as the fact that we also have that new week opening gap as well. On the M5, standard deviation anchored from this candle's high all the way down to this candle's low, -2, -2.5, in alignment with that -2, -2.5 that is anchored to the hour 1 chart being right here. And then dropping down and taking a look at the M1, so a lot more descriptive of what we have going on. So 10 a.m. open, we deliver up towards buy side above equilibrium of our opening range, simply meander around a bit. So we have that deliverance up, deliverance down, deliverance up, deliverance down. And then we have a phase of time distortion occurring here until we engage with that M5 SIBI low. And what we take a notice to is we engage with that M5 SIBI low ahead of our 11 a.m. candle. 11 a.m. opens right here. 11 a.m. opens, forms a high, engaging with that M5 SIBI low again, but fails to engage with that high that was planted inside of that M5 SIBI. And a cracking correlation presented itself here, which is what permits for this candle to be the high of our 11 a.m. candle. It's then followed with a order block. So these series of up close candles, we have a series of down close candles, and this deliverance down towards sell side was very, very clean in relation to how price action was engaging with the PD arrays. It was very, very efficient. We're not seeing any closure inside of the bearish PD arrays. We're not seeing any closure above key levels, as well as the fact that if we acknowledge how price action is engaging with the order block as well as the propulsion block, very efficient price action to the tick, quite literally. But we engage with that order block again to the tick, and then we have that deliverance down, closing above these series of down close candles that engaged with, for one, this imbalance as well as that order block. And that makes this a propulsion block. And this is what we look to execute our position off of. So we have this candle delivering down, closing below these two up close candles, forming an M1 propulsion block. And then we form relatively equal lows with the opening range low. We retrace back into that M1 propulsion block, and we end up doing this at 11:10, framing the power of 3 for that M5 candle being the 11:10 candle. So 11:10 opens, immediately delivers into that M1 propulsion block, and then we have that nice smooth deliverance down towards sell side, engaging with that opening range low and ultimately completing that deliverance to engage with that new week opening gap. And then taking a look at the 15-second, not really anything here other than the standard deviation that was utilized for us to get out of the trade. So from this candle's high all the way down to this candle's low, -2, -2.5, we end up seeing how this is used very nicely for reaccumulation, redistribution of orders. And then we have that -4, -4.5, and that -4.5 is ultimately where I look to collapse the trade, as it was just residing just under the opening range low. And then lastly, taking a look at the actual execution. So we have that 15-second standard deviation projected out in price, engagement with that M5 SIBI low, deliverance down, reaccumulation of orders at that M1 order block, deliverance down, engagement with that M1 propulsion block, deliverance down again. And with that deliverance, with the M1 propulsion block, we end up forming a 5-second change in sustained delivery. So series of up close candles, series of down close candles. Simply just look to execute the moment we closed below the series of up close candles, and we're simply looking to target that -4.5, as well as a standard deviation could be anchored to this leg right here. So from this candle's high all the way down to this candle's low, you have your -2, -2.5. So yeah, that is basically it in relation to the execution for NASDAQ on Friday.